Tons of major companies are having earnings reports this week, including Netflix, Procter & Gamble, and Tesla. The whole global economic situation has put a lot of investors in concern mode, and they've been watching earnings like a hawk. Many companies have managed to do incredibly well and continued to soar, while other industries like airlines have really declined. Earnings are going to be significant this year because they're going to provide us an outlook into how a company has fared through all these strenuous situations. I primarily want to make this video just to give a PSA. If you have any stocks or options or anything expiring, make sure to keep into account earnings. We're in an area of a lot of volatility, and we've seen some hesitance in the market. QQQ, which is a huge tech-focused ETF, has seen a lot of hesitation and decline, but as earnings reports for tons of big tech companies approach, we've seen some shaking back and forth. It's a similar thing with the general market. A lot of people are definitely waiting on earnings to see how things go. So my best piece of advice is to make sure you pull up an earnings report for the week. If you have your money in the market, more than likely, whatever service you're using will list when an earnings report and dividend dates and other important dates are coming up. But if you're thinking about investing in certain companies or that earnings date information isn't on the platform you're currently using, there are tons of major earnings dates lists out there. Webull has an excellent one that lists tons of companies, including their estimated earnings per share, and Kiplinger has a huge list with tons and tons of companies. I actually really like theirs. They point to many significant companies, and they really help remind me of what's coming up, what's significant if I want to make plays on larger cap stocks that I don't currently own. And of course, I need to mention earningswhispers.com. This is a fantastic site that does a really good job of breaking down earnings, and they have tons of visual graphics if that's what you prefer to lists. Either way, just make sure you're on top of earnings. American Express is an obvious one, and it's an interesting choice as the concerns with Visa keep coming up, although other competitors like MasterCard have really gone well so far. Tesla is obviously giant and an absolute fan favorite. It's a particularly volatile stock, so it's going to be interesting how earnings affect this one. I highly suspect we will see profitability again. There's no way Elon is going to give up on his S&P 500 dreams. Not to mention, this company has been shipping out cars like crazy. Northrop Grumman is a massive aerospace defense company, although they do tons and tons of different types of work. The Coca-Cola Company is a huge favorite for anyone in the dividend space. AT&T is also a fan favorite for dividend stocks, although they've really seen a rough year. They've fallen off a cliff, but have continued to give out their dividend. We'll see how they manage. Procter & Gamble is a massive company that's actually seen a decent run-up in the past few months. They've been managing fairly well, and they've definitely been pulling in a lot of revenue. Many people have argued they're overvalued, but they've been progressing with very little momentum loss. Alaskan Airlines, American Airlines, a lot of airlines are having earnings this week as well, and that's something to keep an eye out for. I know tons and tons of people bought airlines way down at super low prices, hoping for a rebound, and we'll see how they progress. More than likely, they're going to have negative earnings per share across the board, but we'll see how they pan out next year. Lockheed Martin, another monstrous company in the aero and defense space. A lot is going on, and there are tons of companies out there, so just be aware of your portfolio as we go into a pretty major and possibly historical earnings period. Also realize massive companies like Amazon are having their earning reports after this week. So if you want to make use of the incredibly volatile options currently going around, now is the time. I know if I'm very bullish on a company and I have a lot of information to substantiate that they'll be profitable, what I like to do is sell cash secured puts pretty far out of the money, expiring after the earnings date. The high volatility for going through earnings typically gives you very large premiums for far out of the money stocks. And I think for many of these established companies that are turning consistent profit, there is a lot of concern when there isn't a whole lot of reason. Really, many of these companies have been doing quite well, and some of these companies like Amazon haven't had any issues with this whole pandemic. Best of luck with earnings. Please try to stay up to date on all your stocks, and don't let something like an earning report hurt your finances.